Good evening and welcome. I'm Vincent McCory. This is Africa 54. We begin this evening with a global economic report. U.S. stocks are bouncing back Tuesday after a historic tumble on Monday. The Dow has jumped more than 300 points in early trading after China cut its interest rates on the Asian markets. Stocks in China led another slump Tuesday, closing down 7.6%. Meanwhile, indexes in Britain, Germany and France were up more than 2% in early trading. Worries about China's faltering economic growth pushed down global stock and oil prices on Monday, including an 8% plunge in China. Monday's slump included U.S. markets, which experienced a volatile day of trading before finishing down at least 3.6%. Experts say the stock market was due for a major correction after nearly tripling since 2009. They say the correction may worry investors, but it's a healthy change for the economy that helps keep stock prices from getting too inflated. China's growing economy has been a major market for commodities and all kinds of goods for many years. While worries about slowing growth in China is fueling much of the uncertainty that pummeled stocks around the world, but as VOA's Arcega reports, economists say the volatility is a normal part of a healthy stock market.
Whether it's a slowdown in China or the plunge in oil prices here in the United States, experts say the stock market was due for a major correction, technically a drop of at least 10% from its most recent high. For U.S. stocks, which have nearly tripled in value since 2009, it's a self-correcting mechanism that ensures stocks are priced fairly, says Joshua Brockwell at Azad Asset Management.
If you think of it as kind of a tremor instead of a great earthquake, so the ground's kind of letting off a little steam, the market's kind of letting off a little steam right now, which is actually a healthy thing for stocks longer term.
Emerging markets in Asia and those that depend on commodity markets were hit even harder. Most depend on steady demand from China, which according to New York trader Ben Willis has not been transparent when it comes to its economic numbers.
The Chinese economy we thought was growing at 7%. It's probably only growing at half that. So a 50% reduction you need to reprice, and that's what you're seeing going on in the stock markets and in the commodity markets.
Despite the market volatility, experts say U.S. economic fundamentals, from annual GDP growth to employment, remain solid. That's why Mark Hamrick at Bankrate.com believes the central bank is likely to stay on track with planned interest rate hikes later this year. He spoke to VOA on Skype.
I don't believe the Federal Reserve officials are going to change their behavior based on several down days in the U.S. stock market. Having said that, if Federal Reserve officials believe that financial market conditions are sort of bleeding over into the real economy, that consumers are pulling back on purchases because they're scared of what's happening in the stock market, then that becomes an altogether different question.
Monday marked the 7th day in a row of steep losses in Asian markets. Key European indexes fell 4% or more, and Wall Street managed to cut earlier losses to 3.5%, its worst day in 4 years. Arcega, VOA News, Washington.